Frequency 5-1. Grade 3 channel 04 megahertz Tuga power. Mic on the podium.
It's the, you're passing them in.
Oh, perfect. Oh, is there, so we're good.
Did you need, sorry, I didn't know where.
Don't make me get up again, right? Thank you, sir.
Absolutely.
Where's Wayne? Oh, it's probably up on the board.
No trees.
I mean. Look at it.
The mics are all
Is this when you were, is it on?
So Al is technically the chair.
They press
Okay.
power.
Um,
Talk.
But if you like fill
I'm
in,
more than happy to.
Okay.
there is an agenda right
I got it.
there for, yeah.
All right, ladies and gentlemen, we are gonna call the Suburban Mobility Authority for Regional Transportation Audit Committee meeting on Thursday, December 7th, 2023 to order. I guess my name's JP and I'll be serving as committee chairperson for this one. I believe we're gonna start with a roll call, please.
I thought that was, it says chairperson there.
I could do it.
I'm chair right now, so go ahead.
John Paul Rea,
Present.
Royce Manico,
Present.
Brett Razigan,
Present.
Al
And
Hayes
we
is
have a
excused.
excused absence from Mr. Hayes at this time. Excellent. If we could please have the certification for public notice.
Sure. SMART will hold the December 7th, 2023 Audit Committee meeting at 1:00 p.m. in the Buell Building located on 535 Griswold Street, Suite 600, Detroit, Michigan, 48226. This meeting is open to the public.
Excellent. Thank you so very much. Next, we are going to jump into public participation. Any members of the public looking to address matters affiliated with the audit committee? Any elements affiliated with the audit committee going twice? Any elements of the audit committee going 3 times? Seeing no objections, the chair will, oh, sorry about that. Please.
Is this a public comment as regards to,
This would be for the audit committee, not for the full board meeting. The full board meeting will be meeting shortly after this meeting.
just give me 1 minute. It's just
Sure.
dire need to pay the drivers more.
Thank you.
I give out hand warmers and bus tickets at the bus stops. It's something I've been doing a long time. Have some empathy and sympathy for those who are not getting where they need to be on time. And
Sir, if we could please have your name and city, if you don't mind.
Detroit, Michigan, Brother Cunningham.
Thank you, Brother Cunningham. Always a pleasure. to
And
see you.
that's it. Just it's dire need situation. And hopefully your contract is closed soon for the bus drivers, because DDOT can reopen their contract, but they're waiting on y'all to find out where your dollar amount's going to be. God bless.
Thank you, Brother Cunningham. Always appreciate it. Any other members of the public? Seeing none, we will close public comments. And we will now head into the draft for the fiscal year 2023 audit. Ms. Hill, always good to see you.
Yes. you as
Keith,
well.
what's happening? Always good to see everyone. What's happening at Plant Moran? And thanks for coming along for the ride today.
So what we'll do.
Oh, so yeah, Ryan,
um,
probably start as per usual.
You will see that these reports are marked draft. These are the final versions. We are going with barring any problems or additional comments from this committee. We've got our friends from Plant Moran on hand who are going to give a brief overview of their audit and how that went, as well as just touch on some very high level financial informations. We can dive into this document, which is the financial report, as well as the federal awards report that we have in as much detail or as little detail as you want. I know most of the members had a chance to at least review this somewhat beforehand. We will highlight a few changes this year, but other than that, after that, we'll open it up to questions and go from there. With that, I'll turn it over to our friends at Plant Moran, and I will pull up. You guys want to start with the financial report?
Yes, that'd be great. Thank you. So hello, everyone. I'm Pam Hill, partner with Plant Moran. Have with me here today Keith Schmansky, who's a principal, and Amy Tytar is the manager at Plant Moran. We all specialize in our firm's national transportation practice. So happy to be here today with you all to discuss the results of the audit. As Ryan pointed out, we do not anticipate any changes from anything in front of you today, other than maybe some formatting or processing items as it goes through our final processing and proofreading department. But happy to take all and any questions today. We did spend over 1,100 hours this year auditing the books and records of SMART. So that would include your financial statement audit, your federal awards audit, which we will get into, spending of your federal dollars. That will also include, we perform 9 different agreed upon procedures related to testing on subrecipients, connectors, folks receiving municipal and community credits, as well as a report that's required by the FTA for the National Transit Database reporting. So almost all of those reports are done. The National Transit Database report usually lags a little bit behind due to the timing of when that's prepared. That's typically done by us in January, February timeframe. And so with that, as you can see, it is quite a bit of work, not only on our part, but obviously on SMART's part. So we definitely wanted to thank Ryan, Lynn, Nicole, and their whole team. Also, we spend quite a bit of time with Dwight and Tiffany as well as we work through the audit process, and we really appreciate just their viewpoints and their guidance as we move through the audit. So with that, I'm going to turn it over to Amy and let her take us through at a high level the statements.
Thank you, Pam. So how about we dive right in here? We'll start on page 1, where you will see the independent auditor's report. The first section on this page is our opinion, and we're happy to report that SMART has received an unmodified opinion this year, which is essentially a clean opinion and the highest level of assurance that we can provide that the financial statements are free from material misstatement. Moving on from here, pages 4 through 6 is management's discussion and analysis, which has some comparative data and narrative over what took place the last year. So if anyone were to look to get high level information without looking through all, 50 plus 75 plus pages of this report, this would be a good section to review. Following this section is the statements themselves, as well as the notes to the statements. If you go ahead and flip or scroll to page 7, we can briefly go over the statement of net position. So first, you can see current assets are up by about 21 million. This is mostly due to increases in cash of roughly 27 million. Non-current assets decreased by about 8.8 million, which is a result of depreciation on capital assets being greater than new capital asset additions. Moving down the page to current liabilities, there is a decrease here of about 5.7 million, which is more than half of that is coming from the accounts payable line. Fluctuations within this group are largely due to timing of what SMART owes to vendors and others as of June 30th. Non-current liabilities are very consistent last year in total. However, if you take a look at the lines within these categories, you'll see a couple of big swings relating to pension and OPEB that essentially offset each other. So SMART's net pension liability increased by almost 39 million. However, it is key to remember that this liability is measured as of December 31st, 2022, which is MERS most recent year end. If you think back to the market in 2022, it may not come as a surprise that the increase in the net pension liability is mainly due to investment losses. On a good note, however, is that as we're almost to the end of 2023 now, we would expect 2023 to be a positive year that will likely offset much of the decreases from 2022. The pension plan is a hair under 75% funded. Moving to, since the net pension liability increased, SMART's net OPEB liability, which is related to retiree healthcare, decreased by about 40 million. So there's the offsetting piece of that. Unlike pension, the OPEB liability measurement date is June 30th, 2023. A mix of investment gains and changes in the actuarial calculation of the liability were driving forces behind the decrease that we're seeing here. Smart's OPEB plan is about 86% funded as of year end. And if you'd wish to take a look, more information related to pension OPEB is included later in the financial statements, but we won't go through that at this time. The last thing to note here on this statement, if you turn the page or scroll to page number 8, would be net position itself. So net position is split into 3 categories: net investment in capital assets, which has already been spent in the form of buses, terminals, equipment, and other assets; restricted, which makes up only a very small portion and can only be used for specific purposes; and then the remainder of 72.5 million categorized as unrestricted, which is available to fund future operations. Continuing to page 9, this is the statement of revenue, expenses, and changes in net position, or the income statement. Looking first at the operating revenue category, you'll see that fares are up almost 9%, or $400,000. Operating expenses, the next category there, are up only about $2 million. Keep in mind here that the micro transit program is relatively new and has been ramping up, and that expense line alone increased $3 million. Now, as we keep moving down the statement, the non-operating revenue is where you'll find all the major sources of revenue for SMART. Local contributions, which are property taxes, are up roughly 8%, or $6.5 million. Your next biggest revenue category here, state operating grants, was up about 6%. Lastly, this section also includes your federal operating and preventative maintenance assistance, as well as other state and local sources, which would include federal grants and other state grants respectively. From one year to the next, these categories, along with capital contributions, which is just under that section highlighted on screen there, they can increase or decrease based on the activity for the year and how SMART elects to apply it to available grant awards. So overall, 26 million was added to net position this year. And honestly, we'll end with that as far as going over the statements. We won't go through the rest of the pages, as these were the main statements to take a look at, but certainly if there are any questions, please feel free to ask.
And maybe if I can just add.
Yeah.
Comments. Thanks, Keith. So I think just maybe a kind of a high level overview of some of the details that Amy covered. So clearly, SMART has a stable financial position. You have been able to add to net position over the last several years. Keep in mind, and I know we're going to touch on this when we talk about the federal awards, but you have had quite a bit of COVID funding that obviously is, once it's spent, is going to be gone and won't be reoccurring. So keep that in mind as you continue to look forward and budget out and project out into the future. So that's definitely affecting the cash position and your net position as of the end of the year. And then lastly, I did want to just briefly, I know Amy talked a little bit about some of the fluctuations in the pension and retiree healthcare liabilities. I think one thing to maybe point out first on pension is you have always hovered around that 70 to 80, sometimes more than 80% funded level. That is a considered to be a well-funded plan. So when you look at just plans nationally, that's kind of the range that most would define as being a well-funded plan. SMART has been and continues to contribute a little bit more than what's required by the actuary, which is, the actuarial contributions, what's required under state law. So you are meeting all of your state requirements in terms of that. And you are just going to continue to see these kind of fluctuations up and down every year. But I think it's more important to really look at the long-term picture and where you're at from. Not only are you meeting your contribution and fiduciary responsibility, But just more of a long-term focus on what that number is versus just year over year. Because of the way that it's not smoothed, the investment gains and losses. And then similarly on your retiree healthcare, I think same thing. You ended the year, I think, in a good spot. If you were to look at the trend over the last 6 years, SMART has really put a focus on ensuring the viability long-term of your retiree healthcare for your employees and your retirees. And that's evident by the fact that you continue to contribute to those retiree healthcare plans. And your plan was, had a very good year, as Amy pointed out, because it was based on your June 30 year end. But even the 2 years prior, you were still funded in about the 60% level, which when you look back, maybe over the last 10 years and, when you weren't funded at all, you've made up quite a bit of ground in a very short period of time, in again, ensuring that viability for the employees and the retirees. So I know that's been a key thing for both the board and management in terms of ensuring the security of that. So wanted to point that out as well. Any questions on that before we move to the next document?
Mr. Razzing and Mr. Manico, anything, Mr. Manico?
I'm looking at page 33 and we haven't got there yet, so I would assume, and on page
Yeah, go ahead.
36, so when we get there, let me know and I have a
No,
question.
you know what? We could take your question now.
Yeah.
Go for it, Rice.
On page 33 in the middle, under OPEB liability, a change in assumptions. And it remained the same of 16,924,200. But then on the next page, you had actuarial assumptions. Do you mean the actuarial assumptions? Is that what you're talking about?
Correct.
Yep.
Yeah. So the actuary changed the assumptions related to the investment rate of return this year due to the mix of investments that MERS has invested, that SMART, I was thinking pension here for a second, that SMART has invested those dollars in. And so that assumption has changed down from 7% to 5.5% to be more in line with market. Right?
It's the same
Oh,
as
5.5.
pension.
I'm sorry, I said that backwards. It went from 5.5 to 7. So it's actually gone up, which has reduced the liability. Thank you.
In the idea being that brings it in line and parity. So we're using similar assumptions between the two plans, right?
Okay. On page 36, I know some time ago we had, is it Gas now or Gatsby? I'm not
The
sure.
Gatsby 87. You have a good memory.
The leases
Yes.
in the middle of the page, under 2028, all of a sudden the lease principal goes way down. And I'm trying to figure that out because I'm assuming with all the parking spaces, et cetera, that lease should at least remain the same, or I'm not sure why the big downturn in 2020.
Sure. Go ahead, Ryan.
Well, I was just gonna say that is the date or the fiscal year in which the Buell building lease expires.
Okay, so you're assuming that Dwight is going to negotiate a half. Good thinking. I appreciate
Well,
that.
we won't have an obligation after that date to pay unless we enter into
Right.
another agreement. So that's why you're seeing the
I see.
reduction in the
All right.
principal.
Yeah, it doesn't, the standard's a little unusual, or maybe not, and then it doesn't ask us to try to predict the future. It's just what contracts are signed in place as of today. So,
Yeah.
yep, great point though.
All right, it just caught my attention. That's all the questions. One more question. I'm sorry. When we have the contracts that are being negotiated and agreed upon on the National Transit Database on the employee raises, we have to enter that information in the National Transit Database, I assume?
The contracts themselves,
Not the contracts, but say a driver's wage increase.
We do report that information to the NCD quarterly.
Okay.
Yeah.
So that's gonna create, I guess, a little more work for the staff. In terms of, okay,
It shouldn't be, no, it shouldn't, I mean, it will be more work, but not
right.
nothing we can't handle.
Thank you, Mr. Manico. Mr. Rezgian, anything?
No questions.
Excellent. Appreciate that. Now we're gonna move over to the federal side.
Yes,
Perfect. Go ahead,
Sure.
Keith. Ryan, appreciate it.
so we're going to move on to the 10-page report with a cover letter, federal award supplemental information. So this is also known as the single audit report, and a single audit is required anytime an entity expends $750,000 or more of federal money, as SMART does by quite a bit every year. So included in this report are 3 opinion letters on the schedule of federal expenditures, internal controls over financial reporting, and controls over grant compliance. All of those are unmodified opinions and clean audit reports. What follows that is the SEPA, the schedule of expenditures of federal awards, that lists out all of SMART's federal spending for the year. That includes the federal transit cluster with over $22 million of spending, and the transit services cluster with more than $3 million of spending. Both of those were tested as major programs this year. And if we flip to the last page of the report, page 10, the schedule of findings and question costs summarizes the audit results for the year. And happy to report that this is as clean of a schedule as we can provide. As I mentioned, all of the opinions were unmodified, and we had no material weaknesses or significant deficiencies related to either the financial statement audit or the federal single audit. So again, that's a tremendous credit to the team here at SMART for staying on top of all of these ever increasing compliance requirements, in particular with the new COVID spending, and making sure that the millions of dollars SMART receives and spends were spent appropriately and in accordance with federal guidelines. So we do list out a little bit below the middle of the page those 2 major programs that we're required to test. Those accounted for nearly $26 million of total spending, and over 98% of the total federal spending was subject to testing this year. So the fact that there are no findings doesn't leave us much to discuss right now, but I don't want that to go unacknowledged. Again, what a tremendous accomplishment that is, not just on the federal side, but with the financial statements and the thousands of transactions that are processed during the year, the new GASB requirements, and the effort that it takes to close the books as of June 30th each year. It is fairly common for us to identify some entries as part of our audits with various entities, but there were no significant items that we need to bring to SMART's attention this year. Lastly, I will move on to our end of audit letter addressed to the board of directors. That includes 3 sections. Section 1 is required by the auditing standards. This is basically a follow-up to the planning letter that we sent out to the entire board as we were getting ready to begin the audit. This is where we would report any deviations from that plan or significant items that need to be brought to the board's attention. And again, the fact that there's not a lot here for us to discuss is a good sign. At the top of page 3, there is one section that is tailored specifically to SMART, where we list the most significant estimates included in the financial statements. These are the same as they have been in the past, but they're the net pension and retiree healthcare liabilities, as well as the estimated liabilities for self-insurance claims. And then third, the estimated reserve for the Act 51 revenue. That's a required calculation due to the fact that it takes all the transit agencies and MDOT as a whole multiple years to close the books in terms of exactly what each agency's share of Act 51 revenue will be during the year. So SMART's required to look at what their actual spending was compared to budget, as well as a projection of what the rest might have happened throughout the rest of the state, and estimate that reserve. But we looked at the inputs and the assumptions for all of these assumptions. We think they're fair and reasonable, and that's why we're able to give our clean audit report. Going down from there were no difficulties encountered in performing the audit, no disagreements with management, and no corrected or uncorrected misstatements identified as part of the audit. Moving on to section 2, Here we touch on a few observations that we made as part of the audit and potential improvements that SMART could make, or at least worth evaluating going forward. So first of all, related to investments, for several years, the potential return on a governmental entity's cash and investments has been next to nothing. So this hasn't been a major area of focus. But now that investment rates have increased in recent years, there are limited opportunities. Governmental entities are still severely restricted in terms of what they can invest in by state law. But there is the opportunity to increase investment returns compared to what they were in recent years. So we note that it was about $3 million of investment income in 2023. But it's at least worth exploring other investment options to try and increase that amount going forward in order to take advantage of the currently high interest rates. Second item we report here under agreements and reporting with community partners. As Pam mentioned, we do several agreed upon procedures engagements in which we test the reporting and the reimbursements to both subrecipients of grant funds and community partners. And we have been noting, particularly of late, some inaccuracies in that reporting from those community partners. And so we recommend that SMART take a close look at the reports both for this year and some of the recent years, work with those particular entities, but also all of its partners in general to ensure that they're clear on what's being asked of them and required to be reported to SMART, what's required in order to receive their share of the funding, and that they are providing both what's requested and in an accurate manner. The third item related to internal audit is observation we discussed with management heading into this audit, which is just that a lot of the transit agencies that we work with of SMART size and greater have at least one person performing internal audit responsibilities, if not a small department. And that is something that if SMART were to consider implementing could bring some benefits to the agency. Internal audit provides not just some testing of internal controls, could also help review grant compliance, help with this recommendation with the community partners, and also potentially identify some best practices in terms of operations. So there are a number of small items that come up during the audit that don't rise to the magnitude of things that are reported at the end of the audit, but having someone dedicated to keeping an eye on operations and internal controls throughout the year, as I said, could help identify both best practices and potential savings for the agency. And then lastly, in terms of grant best practices, there are significant administrative functions that must take place in order to gather the eligible expenditures and submit them for reimbursement from the federal agencies. And then it takes some time to receive those reimbursements. But if SMART were able to decrease the time that it takes to submit those requests and get the cash on hand sooner, they could also take advantage of interest rates now. So that once that money is spent, it is essentially owed to SMART from the granting agencies. So to the extent you can speed up that process a little bit and get your money in your bank account sooner, that would benefit the agency. And then the last paragraph here on this page relates to ensuring that the subrecipients are complying with their requirements as well, which includes paying their vendors before they receive the federal funding passed through SMART. In some cases, the documentation is not clear that that's always taking place. And so that is an area we recommend SMART take a closer look at as well. Then just to close things out, Section 3 of the letter are some legislative and informational items, not specific to SMART, but just things that we think are hot topics and worth noting going forward, but we won't go into in any more detail unless there are specific questions. So that is everything we had planned to discuss and summarize in terms of the audit results, and we're happy to pause again and see if there are any final questions.
Thank you, Keith. Appreciate it. Mr. Razigan, Mr. Manico, anything?
I did like your comments on the cybersecurity and information technology. That seems to be becoming more and more important relative to public agencies. And certainly I know our staff is on top of that as best they can. And you never know when that's going to occur. think I got 3 letters in the last 3 weeks from different health agencies warning me that their information was stolen.
Oh, geez.
Mr. Resident.
Just absolutely outstanding. Thank you. And coincidentally, we've been having some meetings at Oakland County and we had one yesterday and we too were thinking some added scrutiny of the community partner and municipal credit, community credit. I shouldn't say scrutiny, some tracking. I don't know if all the communities understand fully the process and are probably inadvertently making mistakes. That's that.
Yeah, Mr. Resident, I think that's an interesting thing when we look at it from a whole notion of control, oversight, transparency, and accountability perspective too. And Ryan, whether you have some insights or some preferences of what that could potentially look like, whether that's something that Dwight and Tiffany want to bring to the consideration of the board, I think we would be sympathetic in not only understanding how we would structure something like that to the benefit of this process, but also maybe to other elements of whether it's from an operations perspective or even from a management and oversight element on that side too. So it's always good to have the Plant Moran seal of approval. Very much always appreciate the effort from you all here and continually helping spearhead this process. And Ryan, as per usual, just the gold standard on all fronts from you and your team. Cannot thank you enough for the stewardship throughout this process.
Thank you so much.
Excellent. Alrighty.
I guess the last order, if we could do
Motion to receive and file?
a motion to take to the full board in about an hour here.
All right, can I receive a motion to take the draft audit to the full board in about an hour here?
I guess that was it.
So moved.
It's been moved, supported. All those in favor, please signify by saying aye. Aye. Any opposed? Motion passes. If there is no other business before the audit committee, the chair would entertain a motion to adjourn.
Move to adjourn.
Been moved
Support.
and supported. All those in favor, please signify by saying aye.
Aye.
Aye. Any opposed? We are adjourned. Thank you.